Sell everything. Sell everything. Sell your couch, sell your furniture, sell your bed, sell your car. You can use a bicycle or those electric scooters that are out in the cities, right? You thought I was going to say sell your assets. Well, here's the thing. You're late. You done messed up, right? The time to sell or even go short was like 6, 5, 4 months ago. Now is not the time. Like what a pro does in the beginning, a fool does in the end, right? So it's all right. You didn't time the market. Who cares, right? But what you can do to redeem yourself is don't be a little bitch and scrape together as much cash as you can and get active. That's really it, right? So, okay, it is Sunday night, 8:34 p.m., which means the stock futures are open and Robinhood 24-hour trading just opened and things are down horrendous. It is bad. So as you can see here, the US 500 S&P in futures right now, Sunday night, is down. At one point, it was down 5%. Now it's at like 3.5. So I don't know what's going to happen tomorrow on Monday, April 7th, but I got a feeling it's going to be another red day, the third back-to-back-to-back red day on the market, which I'm hearing might be a first in like 40 or 50 years, if I'm not mistaken. I think 40. So what I want to run through today, really, really quick. This is raw and uncut. Again, futures opened up, Robinhood trading opened up 24 hours. So right now we're taking everything in. Nvidia's at like $87. Let me open up Robinhood actually. Robinhood stock is at like, it was at 29, now it's at 31. Nvidia fell to like 86, 87. Let's see what it's at now. Everything's going down. Tesla is down like 10% overnight or something like that. Yeah. Everything is down. Meta, Google, especially tech, right? So the Mag 7 continues to get beat up. Like I said, so here's the thing. What you can do if you know like nothing about the stock market, you can go in TradingView, right? Type in whatever company you want to look up that you like, that you've heard about, your friends talk about, but now you want to get some insight. So scroll down a little bit, click on this, upcoming earnings. And then once you scroll down, you can see the estimated revenue and you can click on a quarterly or annual basis. Let's click annual. So right now, the year that they just finished, they made in revenue 1.448 billion, right? So 1.5 billion. Next year, they're poised to grow quite a bit. Then the next year after that, and so on. So by 2028, the estimates, again, just estimates by analysts, right? 4 billion in revenue, which is like a 3x from today. So if the estimates are going up this way and the price is going down this way, and there could be some, fear arbitrage that you can buy when nobody else wants to touch it, right? And let's go back to this sketch. So this is really what it comes down to. I tell people like not to overthink crypto prices. Why is crypto going down, up? So it's easy, right? Equities, everything on the left side of this curve, whether it's stocks or crypto, the more risk on assets are basically aligned or parallel with the global liquidity, right? When there's a lot of money moving around, whether it's money printed in 2020 and 2021, whether it's interest rates are low, whatever it is, when there's excess liquidity, people take more risks, money's moving around more, and then more of it, like money needs to find a home, right? And it's either in savings accounts, which could be, at a bank, but essentially big money is either in treasury bills and bonds. Because when you put your money in the bank in a savings account, it's not just sitting there in a savings account, right? The bank turns around, buys treasury bills, bonds, whatever, right? Loans it out. So your money in general is either sitting in treasury bills or bonds. And this is not just banks, just money in general. It's either in gold, it's in stocks, sometimes it's in crypto or amazing tokens like Fartcoin, which are super groundbreaking. So money's always on the move, but it tends to move along with the risk curve, right? So when there's a lot of excess liquidity, we're in a risk on market, which was 2024, 2021, etc. So right now, where are we, right? So right now we're on the roller coaster is kind of going down, away from risk. How long will this downward leg be? We don't know, but there's just a lot of uncertainty right now. That's the big thing, uncertainty. And it's obviously around like tariffs. And let me go back to that real quick. So right now, money is moving from the stock market into treasury bills, bonds, and maybe gold. So it's moving away from the riskier assets and going into the safer ones, right? It's always a transfer. The money's always finding a new home based on the environment, based on the global liquidity, etc. So that's all that's going on, right? But the problem is when it's here, when it's on the right side of the curve, and if you zoom out, sometimes it kind of looks like this. It's just a big roller coaster of risk on, risk off, right? Especially in crypto. That's all crypto is. It's global liquidity, risk on, risk off. So you just got to be aware like where we are on this curve. And right now, I would say we are in the risk off territory. How early or how late, it depends on, a lot of things, right? But here's some reassurance that, and again, I could pull up so many of these charts. But last Thursday and Friday, when we closed off last week, the market was down both days back to back. And in those 2 days, we experienced a decline of 10.5%, which made a new record, the 5th largest 2-day decline in the S&P 500. So we notched up April 4th, 2025, and we got on the boards for the 5th largest double-day decline. But what do you notice on the second half of this, right? Or better yet, what do you not notice? Like, what do you not see in this? Forward S&P 500 total returns, meaning after this 2-day onslaught, pick any of these top 10 days in history, these huge double-day declines, and then this is their 1-year forward return, 3-year, and 5 years. So 1 year after these two like bloodbath days, 3 years and 5 years, what were the returns of the S&P, right? After it shit the bed on these dates. Well, what you don't see is any red, right? There's no red. In fact, it's all like double digits, except for this one right here. And sometimes some of them are triple digits. So what you see is outsized returns, because when we get a rare occasion where the S&P or the market in general has a really bad concentrated day, 2 days, or even 1 week, well, that means it took a really big aggressive downward spiral, which usually is like an emotional swing, psychological swing. And historically, that's always been a great time to buy. Now, you don't have to blow your whole load, right? You can just start off with a little bit, but you want to be deploying capital here, right? On Monday, when we open tomorrow, you want to start deploying capital. If you've been sidelined, just waiting, like when's the best day? Is it going to keep going down? It doesn't matter if it keeps going down, right? Because the lower it goes, the margin of safety gets higher. As you see, like all these companies, crashing overnight. We'll see what happens tomorrow. But a lot of them are getting cheaper. So let's check out NVIDIA, right? So NVIDIA is now at the same price it was 1 year ago. But their data center revenue from a year ago has doubled. Their price to earnings from a year ago has been cut in half, from 80 to 32, even more than cut in half, right? Which is good. It means the company is trading at a cheaper valuation, a better bargain today than it was 1 year ago. But the price has gone down, and basically time traveled back 12 months, right? So you want to watch this. You want to watch the fundamentals. What companies are ticking up in revenue and growth and margin and gross margins and net profit margins. And once those are going up, while the price is going down, they form an X, right? X marks the spot. That means you buy. It's really that simple. It's really that simple. For example, like Netflix, the price went down. Actually, let's see how that's trading in the 24-hour markets. But Netflix, right? It doesn't really have many tariff exposures. But in the last week, it's down 12%. 12%. I'm not sure what the price to earnings is, 43. But Netflix is probably a name to watch as well, because it did the same or some very similar thing in 2022. It went down about 75% in price, 75%, but the fundamentals definitely didn't change. So you wonder why did it get that cheap? Well, you get those psychological swings in the market, right? Which I keep on talking about. But it's still, I think tomorrow will be a really insightful day, an inflection point, a pivotal day, because getting 3 back-to-back-to-back red days of more than 4% is actually super rare. If they're above 4%, 3 back-to-back-to-back days, I believe the last time that happened was like in the Great Depression or something. I think that's the stat that I saw. So we'll see what happens tomorrow. Like, will it just end up flat? Is the market just super, like, was there a lot of pent up fear, aggression, and anxiety over the weekend? And now that futures open, it just kind of, the floodgates open and it got a little, overly dramatic. We'll see. Also, like the Japan index or indexes just got halted because they hit a circuit breaker for, there's a limit that they can go down, and then they stop the trading so things can cool down, and they kind of manage so that there isn't a huge drop. They're kind of intervening, right? Which there's circuit breakers on, I believe, the US indexes as well. So I don't think we get to that point, but it's not just the US, right? It's not isolated here. Japan, Chinese markets, actually we can see it on the, we can see the Nikkei, where is it? Basically everything, right? We have the DAX, the German stock futures, the England futures, Switzerland, everything is in the red. The only thing that's in the green is South Africa stock market. Yeah, here it is. Here's Japan. So yeah, they got halted. I'm not sure, what's going on there, but all across the board, it's red. What you want to do is just remember this tweet right here. 7 of the 10 best days in the market occur within 15 days of the 10 worst days in the market. It's kind of a little mumbo jumbo, but what it's saying is when you get a really bad day or week in the markets, usually there's a bounce, a reversion to mean, right? Things revert to mean, meaning for a moment in time, there is a wild, like asymmetric dip or something. It can work in both directions, and then things kind of revert to the mean, right? To the average. So when there's a really bad day, the odds of a really good day after that within like 2 weeks is very high, right? So that's going to happen 100%. Now, will the market keep going down after that? Maybe, right? There's so many variables. There's no point of even keeping track of like all the macro stuff. Charlie Munger said it best. Micro is what we do. Macroeconomics is what we put up with, right? So whether that's tariffs, wars that break out, that's just something you have to put up with. But the main focus is businesses, right? For the stocks you want to buy, focus on the actual business, right? Pull up the fundamentals, listen to past earning calls, take notes, and just really study the business. Because the business, a lot of the times, like all the businesses are hit with macroeconomics, right? They're all victim to all the macro stuff. But that's gonna iron out, right? That's gonna settle itself in the future. Things always move forward. We always get past every hurdle, every bump in the road. So all you can do is study the business, and when it's cheap, shoot your shot. Don't empty the clip at once, and just keep accumulating. So in times like this, in rare times when you see like, especially tweets such as, where did it go? Charts like this popping up, like, oh, we just made the 5th largest 2-day decline, right? When you start seeing historic records being made on charts like this, it's probably a good time to buy. Now, don't get too like upset. Let's see what the names are doing on Robinhood 24-hour trading. Let's see, Google was down a little bit, quite a bit. Yeah, all the Mag 7, I mean, there's no way around it. Amazon, they're all down. So just keep track of, underlying business, and some stocks will get hit harder than others. I know Nike's having a hard time because of like the Vietnam and Cambodia tariffs. Stay put, stay sane, scrape together, raise capital, sell winning positions if you have to. Like if you have winners in the market, like I just did this with Celsius. Celsius, for whatever reason, did really well this year. Now it had really bad 2024, but year to date, it's up 20%, even though everything else is down like in the red year to date. Celsius is good. So that was like a winner. So I sold it at a profit, like literally just when the 24-hour markets opened up. Now it's at $31. I sold it for like $33 at a profit. And that way I unlock like $12,000, $13,000 that I can now use to buy something that's much more beat up than Celsius, right? So don't be afraid to sell winners when there's a big discount in other areas you're super interested in. All right, guys, I'll make another update video after Monday, tomorrow's close, to see, assess the damage and see what positions of mine got wrecked. I have, I have one position expiring tomorrow, a credit spread on the S&P, which is not looking good at all. I think that is an L that I have to just chalk it up to the game. That's about like 2,700 that I'll probably lose tomorrow, but you never know. So I'll make an update video and yeah, keep you guys updated. So see you guys in the next one. Godspeed. Take risks when others are fleeing from it. Get rich or by trying. See you guys in the next one.